Hi everybody, welcome to another update on the stock screener. Today we're going to talk a bit about gold miner leverage. So this is my chart of gold miner leverage. As you can see, many of these large gold miners like Newmont Mining, Alamos Gold, Agnico Eagle have very low leverage to the gold price. Typically around 1.2, 1.5 leverage, meaning that if the gold price goes up 10%, then these stocks will go up maybe 15%, right? So very low leverage. When you go more to the right, then you have much more leverage. For example, Monument Mining, which I like very much, has 10x leverage. So if the gold price goes up 10%, then Monument Mining is going up 100%. Same with SOMA Gold is at 6 times leverage right now. If gold goes up 10% from 2000 to 2200, then SOMA Gold goes up 60%. So I like to buy things that are in this category. I added Caliber Mining as well. It's somewhere in the average. On this chart, it's 3 times leverage. So not bad. Cerrado Gold is not in production yet, not financed, not permitted yet, but if they can get that project online, this provides 20 times leverage. So I'm looking at this very closely. If they are able to get it in production, I will buy this like crazy. Step Gold still building that underground mine, so we need to watch out for that. This is in PEA stage, so need to wait a bit. This ARIS mining has also a lot of projects, but they need to be built, so that's a long-term game. Marathon Gold is going online next year, so this is actually a very interesting play for me. Problem is they have a lot of capex that could have overhangs, so that's the problem with Marathon Gold. Jaguar Mining has not been delivering, but if they deliver, that would be very leveraged to gold. Yep. So I would avoid these ones because they don't provide leverage. You can just buy gold, physical gold. Why should I buy these miners? They don't have any leverage. So if you are going for gold miners, I would buy the ones with leverage instead of these ones. So how did I calculate this? Let's look at Caliber Mining, for example, which I just added right now. So Caliber Mining, market cap 600 million US dollars, production 276,000 per year. They have capex of 95 million, which can be found here. Growth capital 65 plus 30, so I added 95 million capex, which needs to be added. For example, if it was 0, then all-in cost was 1,200, like here. But with capex, the all-in cost goes actually to 1,500 break even. Right? All-in cost is at 1,200. Interest very low, only 4 million interest per year. They don't have a lot of debt. Tax rate 35%. And then you get this chart. I added some growth to it, 15%, 8% per year. And then you get this scenario. So in function of gold price, the value goes up based on 5 times net earnings. If you take 10 times net earnings, then of course this slope will be much higher and there's more leverage. But to me, every gold mine is the same, big or small. All of them should be 5 times net earnings for me, because I only look at cash flow. So let's say we go from 2000 and we go to 2200. That's 10% up. So then we go from 452 to 646. That's about 200 up, 200, right? So from 600 we go to 800. How much is that? 600 to 800. That's about 30%, right? A little bit more than 30% from 600 to 800. Yes. So a 10% increase in gold gives you 30% upside. So that's a 3 times leverage, right? 10% up in gold gives you 30% up in the value of this company. So 3 times leverage. Let's see if that's what we have. 3 times leverage. Yes, that's about 3 times leverage on this chart. Okay, so that's how I calculated all of these gold miners based on this chart, the 5 times net earnings chart. And this is calculated with production, capex, all-in sustaining cost, interest, tax, and gold price. Okay, so that's how we calculate the leverage. And it's up to you to choose your gold miner based on things like debt, growth, undervaluation, leverage, break-even costs. And I am in SOMA Gold and Monument Mining. I also like Cerrado Gold, but still waiting on permits and all of that. Okay. Actually, I also have something else to show for caliber mining. I have created the NPV flowchart, and you can see that the cash flow is coming in. The thing is, the NPV is still a bit too low for me. So this is the NPV. It's still lower than the enterprise value. So I'm not buying caliber mining at this moment. I think it's a bit overvalued. Also based on this, at 1900 gold, the market cap is higher than the value of 5 times net earnings. So I can buy better gold mines than this. This is going to go down. When you compare this to SOMA Gold, then we see upsides at 1900 gold from here to here. So that's up double, even at current 0.65 share price. I still see a double. So if you just compare SOMA Gold with caliber mining, I would buy SOMA Gold. So that was the intermezzo on gold miner leverage. Use this chart to leverage yourself up against gold. I'll see you in the next video. Bye.